The U.S. Bureau of Labor Statistics is set to release the Consumer Price Index for May, the CPI report. This CPI report is a highly anticipated piece of key inflation data. The CPI report could have a major impact on U.S. monetary policy. That's because Fed officials are closely monitoring inflation trends to assess whether prices are rising too quickly. The Fed's policy goal is to keep inflation steady at around 2%. Economists forecast that the CPI will rise 0.2% month over month and 2.4% year over year. As for core CPI, excluding food and energy, it's expected to rise 0.3% month over month and 2.9% year over year. From this, we can see the market's inflation expectations remain relatively moderate. However, some analysts have pointed out any upward surprise in the data could trigger concerns among investors about inflationary pressure because this could threaten the labor market and economic growth. There is another important point to watch. Just hours after the May CPI report is released, the U.S. Treasury will auction $39 billion in 10-year bonds. Investors will be closely watching demand in the upcoming auction. Foreign investors are typically major buyers of U.S. bonds. However, there are concerns trade policies could deter them. Last month, as yields rose, the 20-year Treasury auction saw tepid demand, which clearly reflects investor anxiety. This combination of CPI data and the 10-year bond auction, when taken together, could deal a double blow to the market. If inflation comes in hot and the bond auction goes poorly, that might trigger highlighted market volatility, especially for indexes like Nasdaq. Its current strong uptrend will likely be affected. So why is the Nasdaq in such a strong position now? What exactly is driving this uptrend? Because the rally has been steady with moderate volume. It's gradually pushing toward previous highs. To break out to new highs, we need fundamental support. If inflation data is moderate, it's manageable, but if CPI comes in hotter than expected, showing elevated inflation, the market could see volatility. It will definitely shake things up. On top of that, we have the 10-year Treasury auction. Last time, the 20-year auction was underwhelming. So for the 10-year auction, how will it perform? If demand is weak again, it will deal another blow. So this window is a key moment for the market. That's why attention is running high. Looking at the current setup, the market clearly hopes the data comes in strong enough to push US stocks to new highs. Especially for the Nasdaq, reaching this point hasn't been easy. From a technical standpoint, this is an ideal breakout setup. Bullish sentiment is strong, momentum is clearly building. We're just a hair away from resistance. It's a key level. If we break above it, technically speaking, this market setup is something to be excited about. It's quite promising. It's definitely worth watching. So with that, these two key data points will shape how the market reacts. We will see how things plays out. Now, aside from watching the indexes, we should also look at individual opportunities. For example, Google, one of the Magnificent Seven, is worth paying close attention to. Its current setup looks strong. Let's take a look at Google. The price action is very steady. It's showing solid momentum. The structure of the chart clearly shows strength. Its pattern has been solid. Recently, it clearly broke above the 200-day line. That's a sustained rally. It broke out, clearing a key resistance zone, and is now holding above the 200-day line. The moving averages are in a bullish alignment. This upward trend has clearly taken shape, and is likely to continue moving higher. It's still pushing upward. Looking at the candlestick, we don't see any clear signs of a top just yet. From its past behavior, we can see Google's uptrend has been consistently steady. It's climbing step by step with strength. So this trend is likely to hold. It's repeatedly testing highs, and along the way, there might be pullbacks. But if you look at the lower time frames, you will notice the structure stays intact. Even with minor pullbacks, it continues rising steadily, wave after wave of solid upside. During this uptrend, after breaking past the previous high, there is a chance we may see a pullback. But that pullback could very likely create a new buying opportunity. Looking at the hourly and weekly charts, at this stage, the uptrend is still intact. It's still continuing. There are no obvious signs of a short-term pullback or weakness in the minor trend. That said, MACD does show a bit of fading bullish momentum. It's starting to weaken, but that's okay. Even if it pulls back here, that could actually set up a great next entry. So from a trend line perspective, even if it breaks past the previous high around this area, even if it does in this range, once it breaks that resistance, it's likely to find support here. That zone could become a new base of support. So if we look at the hourly candlesticks, we can see a clear upward move, right? You can feel that strength in the intraday chart. Right here, when the price was pushed down, it was quickly bought back up. So that previous high is acting as a valid support. That level is holding. This suggests the uptrend is likely to continue. The uptrend has already been established, breaking past the 200-day moving average, and that's opened up the upside potential. Although around here, there's clearly some overhead resistance, so the upside might face some near-term pressure. However, considering Google's fundamentals, there's a high probability it will hit new all-time highs. Why that? Because there's a major positive catalyst, a significant development. Recently, Google has received a big boost from a partnership with AI development company OpenAI. Recently, OpenAI signed an agreement with Google's cloud division. According to the deal, OpenAI will use Google Cloud to support its growing computational needs. Although the two compete in AI, they've still signed this deal, which was finalized in May. This shows something very important that large scale language model training and deployment now require huge computing power, and that's starting to reshape the competitive landscape. This partnership is being viewed as a major win for Google Cloud. And for Google itself, it's also a major bullish driver. Overall, it's a strong tailwind for the stock, especially for Google itself. It's a front runner in the AI space. It's ahead of many competitors. Google has clearly shown strong innovation capabilities. Its creativity and leadership stands out. That's why its stock performance has remained quite steady lately. The recent price action has been solid and consistent. It first broke above the 200-day moving average, then pushed through a key short-term high, cleared another resistance, so the upside is now wide open. And the overall trend remains strong and stable. It's definitely worth watching. As for how far it can go, that's what many are asking. Everyone's curious because upward trend has already begun. From all perspectives, the technical looks great. You could even call it ideal, and volume is clearly increasing, especially during this breakout. Even though it's just a small resistance zone, a minor platform, the breakout came with solid volume. There was clear buying power. Volume is picking up steadily, and compared to previous days, it's nearly 10 times higher. That's strong volume expansion, and strong volume often means the rally can keep going. Prices are likely to keep rising. So, looking ahead at this trend, we can have a positive outlook. There's reason to stay optimistic. A pullback along the way is normal, that's to be expected. From the current trend, we can already see it. Each time it breaks above the previous high, what happens next? A pullback for consolidation and momentum building, a steady setup, step by step upward movement. It's a steady uptrend. The pattern is a choppy uptrend. So if we try to forecast what could it reach, where is it headed, it could definitely revisit its previous high. Given the current trend and positive fundamentals, the rally could continue as long as the market cooperates, and by that we mean no major black swan events. Those are unpredictable. If one happens, it would clearly hurt the market, could drag it down. But if things stay stable, then based on how the stock is moving, challenging the previous high of 206 seems very achievable. It should have no problem reaching that level, but can't break through? That's not something we can confirm yet. We don't have enough information right now, but challenging the 206 level is very doable, though it probably won't happen immediately. At this point, there's just an accelerating trend, but whether or not it can break 206 soon, that's probably unrealistic. So, in terms of timing, it may take 1 to 2 months. And market cooperation is key. Of course, if the Nasdaq breaks out here and hits a new all-time high, that would clearly give tech stocks a huge boost. It would definitely drive the whole sector to rally further. And those top tech leaders, those big names, will likely surge. Google will be one of them. It will follow the upward move. But looking at its own price trend, it's still very steady, gradually rising step by step, so we remain optimistic about its outlook. The forecast remains positive, and the market also shares that sentiment. You can tell just from the trend, volume is there, and that's key. Volume supports the breakout, and the market has responded. It shows signs of a strong upside move, and that's likely to continue. That's quite clear. It's just a matter of how far it goes. It should challenge the previous high, but it will need market support. Whether it breaks that high and sets a new record, that depends on what happens next. We will have to see how things play out. So even in a worst case scenario, the future trend, as long as it continues steadily, has strong potential to challenge the previous high. It's definitely something worth watching. Alright, that's our brief analysis of Google. Just a quick breakdown. If you have any other thoughts, feel free to leave a comment below.